In the previous video, we saw how we can set up the Retail Business Manager Excel template for the initial setup. And now in this video, we are going to see how we can enter the different types of orders. So we are back in our Excel template. We already have entered the basic information that we need in all the products, prices, and partners sheet. And then we have customized the invoice and the purchase order the way we want. So now we are ready to start entering the order information. So let's enter our first order. So I'm going to give the order number as P1, indicating that it's a purchase order. And you could use your own method of naming the orders. Make sure that they are unique from one row to another. You don't repeat the same order number. Other than that, you can have your own convention of naming the orders as you need. And so I'm going to use P1 for purchase order 1. And then the order date is going to be the date when the order was placed. And for me, let's say it's May 1st, 2016. The expected date is when I will be receiving the products from our supplier. So in this case, I'm going to say it's 5th May. So I place the order on 1st and I receive it on 5th. And order type, I will choose purchase because we are purchasing products from our supplier. And our supplier in this case is going to be the ABC company. We expect the payment to be made, which means that we need to pay our supplier, let's say by 15th of May. And then there are some additional charges that we need to pay to the supplier. Let's say it's 50, and then but he's providing a discount of 10. And then there are some notes that we want on the purchase order. So let's say please ship quickly, and invoice number, we're going to leave that out because it's a purchase order. And then tax rate, let's say the tax rate is 10%. So I type in 10. And we have not made any payment to the supplier yet. So let's put 0. So there we have it. So we have entered the first order. Now, in order to complete, we need to tell the template what products are we ordering. So for that, we go to the order detail sheet. Here we would enter only 4 pieces of information. So the first thing is, this is for purchase order P1, and the product ID that we are ordering in this order is boys red t-shirt, red shirt, so BR, and you can see the product name will appear here confirming which product you're ordering. And then the quantity, let's say we want to order 15 shirts, and there is no discount on this, so I'm not going to enter any discount. That we are also ordering in the same order girls red shirt, and this one we want 25 units or 25 shirts, and the partner will be giving us a discount of $1 or whatever the currency is, 1 per shirt. So I'm going to put 1. So let's look at how these calculations work. We are ordering 15 units of the red shirt for boys, and the unit price is 5. This is automatically populated because of the price information that we entered here for this product. The template will pull that into the order details. So each shirt costs 5, and we are buying 15 of them. So 15 times 5 is 75. And there is a tax of 10% that we applied to this order. So 7.5, and then the total is 82.5. For the next line, for the girl shirt, we are ordering 25, and each of them, again, 5 is the cost, but we are getting a discount of 1. So 5 minus 1 will be 4. So each shirt will cost 4, and 4 times 25 is 100. And the tax amount of 10% on the 100 is 10, and the total is 110. So this is how the calculations are done in this template. Now, we don't have to touch any of these. All we have to do is to enter these 4 information, and then we are good to go. Now we are ready to go and see how what we have entered is impacting the template. Now, if I go to the product sheet, I will see that the inventory on hand calculation has now updated to say that we have 15 units on hand, and it says on hand because currently today's date is June 3rd when I'm recording the video. Now we can go to the invoice sheet, for example, the purchase order sheet, and we can put in P1, and we can see the purchase order information for the specific order that we put. And we can see all of those calculations automatically update, tax, discounts, and charges, and we get the total order amount. We get the notes order notes that we typed appear here. Everything is good to go and we can print or send it to PDF. So this is how the data that we entered is now populating the rest of the template. Now let's go to the order headers again, and this time we're going to enter a sale order. So I'm going to call it S1. We're going to enter the order date to be 6th of May because we are receiving the products on 5th of May. So on 6th of May, we will be entering, and let's say we expect to ship this to our customer on the same day. So now I'm going to put sale, and we are selling it to our customer. The customer is XYZ company, and the let's ignore these fields of information to keep the demo video short. But basically you enter your order information here for S1 and then go to the order details and type the what are we selling to this customer. Let's say we sell the red boys t-shirt for 10 units, and then the GR, the girls red shirt, 20 of them. And so what has happened now is we have purchased already these two types of shirts, and then we are now selling them to the customer, right? And the calculations for amounts and taxes work the same way. And if we have entered any tax rate, let's say this tax rate is 10% again for the sale order, then you will see that the taxes get calculated again here. So this is how we have created a sale order. The sale order will reduce the inventory on hand. So now let's go back and check our inventory. We can see that we only have 5 units on hand for both. And that's because we got 15 from the partner. We sold 10 of those. So remaining is 5. We bought 25 of the girls' shirt, but then we sold 20 of them. So now we only have 5. So that's how the inventory calculations work. And now let's go to the next type of order. Before we go to the next type of order, I want to also say that the difference between the purchase and the estimate is nothing but when you do a purchase order, the inventory calculations will update because it's a confirmed purchase order. But an estimate is a purchase order that is not confirmed yet. So this is just for you to enter it. You can print it, but it will not update the inventory and add more inventory of your products because it's an estimate. The quote is very similar to a sale order, but it will not impact the inventory calculation by reducing the inventory because you're not actually selling yet, because it's just a quote for your customer. So those are the other two types of orders. Now let's assume that the partner sent us those units of inventory, but then we found out that there is some damaged inventory or damaged product in what the partner sent us. So now we can handle that in this template by entering another order. So I'm going to call it PR for purchase return. The purchase order, we're now returning some of that. So I'm going to call it PR1, and then I'm going to enter the date because we found out on 6th May that there is some damage. So I'm going to put in 6th May, and we're going to send it to them on the same day. And this is going to be a purchase order, and this is going to be for our partner ABC company. And what are we returning back to the partner? So we come on to the order detail sheet, and let's say we're going to return the boys red shirt because out of the 15 units that we received, let's say 5 of them were defective. So I'm going to put -5. This is very important. When you do a return to the partner or the return to the supplier, make sure we enter a negative value. And then you will see the rest of the calculations work very similarly. We don't have to do anything different. But now when I go and look at the inventory on hand, we don't have any inventory for boys red. And again, let's walk through this again. We got 15, and out of those 15, we found 5 were defective. So we are sending them back. And then which means 15 minus 5 is 10. And then the first sale order to the customer, we sold all those 10. So we have nothing on hand right now. So that is how the calculations for the returns work. Now, let's assume that our customer who received are also returning there, for some reason they are returning back to us. So how do you handle a sale return? So let's look at that now. So this one works very similar to the purchase return, except we are going to actually do, let's say the customer returned it on 10th May and they're returning, basically the XYZ company will be returning our sale order. So we'll be creating a sale order. But the main difference here is when we go into the order details and enter what are they returning to us, we will put a negative value. And so they're returning 5 units out of the 10 that they purchased from us. They are returning 5 of them back to us. So what this will do is, let's go back here to the products. Now we will have 5 more on hand because the customer has returned 5 back to us. So the supplier, the sale return order is working fine in terms of calculations. Now these 5 units, let's say that they are not usable anymore and we can't return it back to the partner too. So now we want to tell the template that these 5 units on hand are not usable anymore and we're going to trash them. And so we want to update our inventory calculations to reflect that we have 0 on hand. So this is where the new order type called adjust will come in. So I'm going to call it A1 order. And let's say we do it on the 11th May and it'll be an adjust order type. For this, we don't need to enter a partner because this is just adjustment of the inventory and no partner is involved in this case. So we go to the order details, we will enter A1 and we are adjusting BR and we want to reduce the inventory by 5. So we type in -5. And if we want to, for some reason, increase our inventory, then you could put a positive value here in an adjust order. So the adjust order is very flexible. Now, the one thing that's important is if getting rid of these 5 units of defective inventory is not going to cost anything additionally for you, then let's make sure that the amount comes out to be 0. So I'm going to type in 10 here as discount. And this would mean that the order will 0 out. So it will not impact the cash or the finance calculations at all. So we are adjusting our inventory to be -5, meaning reducing 5 units of boys red shirt. And then we are, the normal sale price of this is 10. We are giving the entire thing as discount. So they will not be impacting our financial situation at all. Because we already have taken into account that when the customer returned the 5 units, we are already being penalized by -50. So the cash impact is already being taken care of. So the adjustment of inventory should only be on the units or the quantity and not on the finances. So that's why we do a discount. So we have gone through in this video so far how you can do a purchase order, a sale order, you can do a purchase return, sale return, and adjustment of inventory. And we can see as we go through by entering this data, we can see the inventory on hand here will update in the products table. And we can also see these things reflect in our report sheet, which we will see more in detail in one of the future videos. But the data that you enter in the order headers and order details will be reflected in other sheets as well. And just like we saw how we can create the purchase order, we can also create the invoice very easily by just typing in, this is my sale order, show me the invoice, and exactly as we customized it, you can print or send it to PDF. In the next video, we'll be seeing more in detail on invoices and purchase orders. Thank you very much for watching this video.